screen.
Here we go.
Oh, hey, everybody. Welcome back to Canadian Mortgage Hangout TV. How are you guys doing? Scott, Jackson, Rob, welcome back. Happy end of summer. Is that a happy thing?
It doesn't quite feel like I don't have kids. It doesn't feel quite like end of summer though, because obviously there's a teacher strike going on in BC, so kids are still off school. So it's kind of like summer still here.
Well, yeah, I guess like you guys don't have the back to school traffic to deal with, so that's a bonus.
Yeah, it is actually still kind of quiet on the roads, so it's nice. Although I think they're working. I don't know. I'm not going to comment on it. We're done.
Okay. Yeah, that's one of those things where you could either potentially alienate a bunch of clients by commenting on either side of that equation, right? If you're
I hope they come to a fair agreement and get back to work. Everybody should get back to work. Everybody wants to get back to work, right?
Work is good. Work is good. Hey, so if you're watching for the first time, or for the 5th time, or 50th time, welcome to Canadian Mortgage Hangout TV. I'm Gord McCallum at First Foundation in Edmonton. I'm joined by the handsome, debonair, talented, intelligent brokers, otherwise known as Rob Campbell, Jackson Middleton, and Scott Dawson at various points of origin throughout the country. How are things, Robbie? What's new out in your neck of the woods? Where are you anyway?
I am. Good news, I'm still in Ontario. Even gooder news, that's right, I said gooder. I have moved from the wonderful royal city of Guelph, Ontario during the summer, and I'm now working out of head office up in Barrie for the Mortgage Wellness Group. So I'm still with Verico, I'm still with the Mortgage Wellness Group. I'm just no longer running out of my own office. I've actually moved up and taking care of the alternative lending side here at the Mortgage Wellness Group. So yeah, that's pretty exciting.
So people in need of additional wellness, is that the class of?
It's a whole different level of wellness. Yeah, let's just leave it at that.
The more acute wellness needs.
That's right. That's right. I think my credit's okay, but I just got a letter from the government. Yeah, that kind of stuff.
Okay, so is this a real change for you? Is this something that what did I do wrong? Why did you send me a note? What did I say that was wrong?
Oh no, that was before we started.
Oh,
I sent you that note before we started when you were busting all of our chops. That's the little message. So yeah, to answer your question, it is different. Working out of Guelph for the last 3 years, I don't know what it was, but I really didn't see a lot of alternative business. A lot of the clients that were referred to me or that I connected with was all A stuff. It was all A, maybe A minus, but really A stuff. I think I can count on one hand how many home trust deals I did in the last 3 years. I don't know why. I just never got that type of business. So it is a very different change for me. It's different in many good ways. So being a part of in Guelph, I kind of wore all the hats. I did everything from answer the phone to close the deal to accounting to thank you cards and all that stuff. I did everything. Now there's a support staff here in the office. So my role is very different. The product is very different. So it's a lot of change all at once. But you know what? I figure if you're not changing, you're not growing. And sometimes I think we get almost into like a Groundhog Day, like that movie Groundhog Day, right? Where we do the same thing in and out, and then the next thing you know, you're 60 and going, oh man, that was a decent ride, but I didn't really change it up much, right? So I thought, you know what? Why not? I think the lending space is going more so towards the B side than the A side. To be honest with you, we're seeing, business for self, stated income, multiple rentals. Like this is not the market it was 3 or 4 years ago. And although A clients will always be A clients, that 80-20 rule, I think it's safe to say if 80% of your B clients, it's safe to say that 80% of your B clients in alternative loans will never bump up to the A side. They'll always stay in that alternative side. The 20%, life happens, stuff happens, whatever, and they'll get back up. But I think the A side is going to be harder and harder to fight for. I think there's a lot of competitive sites online and a lot more openness with information. I think that I think that the A business is going to get harder and harder, and the banks are going to do whatever they have to do to retain those clients to cross-sell them. Whereas the B clients and the business for self and that kind of stuff is getting pushed away. Seeing referrals from institutions where it kind of seems like a decent deal, but they just don't want to deal with it anymore. So that's kind of why I'm jumping on that opportunity with Nick here. And they're a great team. They're I don't like talking about myself too much, and I don't like pumping up my tires, but I like pumping up other people's tires for sure when they deserve it. So the team up here is an awesome team, and he's a great guy. He's a great broker, and I'm excited. So yeah, that's me.
Well, it's likely gonna make you a better broker overall, right? If you can be well-rounded and understand. That's some of the arguments I've even seen from people who have specialized in the B side for a number of years is that you're maybe you're only half a broker or you're somewhat less of a broker if you don't have some experience on the B or private lending side, because that's where the skill as a troubleshooter, problem solver really comes in, and the skill as a broker, you're maybe not fully well-rounded until you've done it. So I've always ignored those people, but I think it's good.
I don't think, and I could be totally wrong, but maybe 3,000 viewers watching this first edition of the third season of Canadian Mortgage Hangout would agree, including you, Ron Butler, because we know you watch. We love you. I don't know that in this time and space you can be the jack of all trades unless you have some weird Rain Man like wicked lightning fast memory. I don't think you can be really good at the A side and really good at the B side and really good at private. I just don't think that's possible. There might be a handful of people out there that can do it. I don't think that you can generally people can do it. So that's why literally now I'm setting up my inbox. I'm setting up rules in my inbox. So when we love you First National, we love you MCAP, all you great lenders out there, but I don't even want to look at those emails because I'm not looking after that anymore. So although I get those emails, they just go right out of my inbox automatically into a folder, and I don't even waste time on them because I'm just not focused on that. And I know my personality. If I'm going to dive in on something, I'm going to be all in on it, and I can't focus on A stuff. So
that's a great approach.
Yeah, I don't think you'd be the jack of all trades.
Rob, I'm going to jump in and agree with you totally because that's exactly the approach that I take, and I took to build my business. Back in when I was starting, I was doing a bunch of B stuff. I was doing A stuff. Anything that came across my desk, it was, I'm in. If it was a HELOC, rental, didn't matter. I was taking it. But it wasn't until I realized that I was only closing 11% of my B stuff, and the time that I could take writing all of those declines, if I spent marketing towards A stuff, which is the first-time home buyers, I actually wrote an article for CMP Magazine called The Discipline to Say No. It wasn't until I started saying no to all the types of deals I didn't want to do and started saying yes, going after exactly the type of deals I wanted to do, that I actually became a considerably successful broker. And it was saying no to everything, which is hard because it doesn't make sense. I'm busy, I'm not busy, I need work, so I'm going to say no to these. Doesn't make sense. Intuitively, it just doesn't work. But by saying no, you focus on what you like. When you focus on what you like, it expands what you're good at. You then become a specialist. People trust you. You get more referrals.
Yeah, that's a good approach. So that's a good tip for newer brokers if you're watching the show live or recorded on CanadianMortgageHangout.tv. You can definitely learn from the experience these guys have had. I've had exactly the same. That you cannot, as an individual, you just can't be a master of everything. So it's good to specialize and focus. Now, moving forward, Rob, I don't want to put you on the spot here, but maybe that's you're going to be bringing a burgeoning new understanding of the alternative lending space to the show. Maybe we can have an alternative lending moment with Rob Campbell on CMH TV. What do you think about that?
Alternative lending corner with Rob Campbell.
Yeah.
Are
I'm
you
your
been
host, Rob.
dismembered, glued back together, shot out of a cannon, and put yourself into a position where you have bought a home? I can help. Yeah. You know what? Yeah, it's going to be interesting. And like I said, 80-20 rule. 80% of people can't help themselves to get to a better position. But I want to try to, and I could get totally jaded and warped over the next little while. But I really do want to give people the guidance and maybe implement something where we can get them. Because you got to understand too, a rolling file in a private deal or a B deal is always, you're gonna. I think and I could be ignorant. There's people out there that do this way more than me. But my quick idea is you're going to run out of options for them. 2-3 years from now, you're going to run out of those trust companies, right? Home Trust, Equitable Bank, Equity, blah, 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 blah. So, but I'm thinking, you know what? If you establish a system where you can help them focus on their credit, help them with Equifax, help them, then you've got an exit strategy on the A side as well. So you can keep them in-house, move them over to the A side, and then potentially cross-sell them there if you could or wanted to or whatnot. So there's a lot of potential there. We just got to get crafty, but yeah.
If you're watching the show, it'd be great to have your questions for Rob on the alternative stuff as we go through the rest of the year on the show. I'm gonna have questions for you, Rob. I'm gonna be asking questions. There's stuff I'm gonna want to know. So keep track of the things you're learning along the way because it'll be valuable for the rest of us. Scotty, how are things out in Vancouver? What's new out there?
Things are, things are good. It's plugging away. It's not it's busy enough. It could always be busier, but it's plugging away with stuff coming through. I guess I was kind of talking, I think earlier this week to Rob on the phone. The issue, I guess, an issue, and I think I'm not the only one. Other brokers I've talked to is just a lot of stuff is just kind of falling apart. It's tough to get approvals, or you're losing the files to a bank, or it's just a tough for me personally. I think this last month has been a real tough go. I don't know what that is. It just seems all of a sudden it's just there's something, files coming in. There's something wrong with the property. There's something wrong with maybe one of the borrowers, or it's just not working. So that's the challenge I'm having. Keeping busy, but definitely working.
That's the feedback I had. I was just on the phone with my underwriter at First National, and she said the same thing, that there's still a steady supply of deals, but the quality is slipping a little bit. And I don't know, we tend to see that in the off seasons. I don't know if we work harder on tougher deals that we might just otherwise move on from because of the time of year. I don't know if that's your experience or not, or if it's just fluke.
Yeah, it's been odd. I haven't had it happen for a long time. It just seemed like this past couple of weeks it all happened at once. So maybe I was due for it or something. I just kind of you just try. I guess when talking with my partner Lori on this, it's kind of like sometimes you just got to move on, right? Like you lose a deal and you look at this file and you go, okay, we've lost it. It's gone. Let's move. Like don't dwell on it. Let's move on. And what can we do? What can we do to bring it out the door? And you got to move on. You can't dwell on these things anymore.
Scott, I agree with you totally. I'm kind of in the same spot. This summer, about a month ago, I decided to go back to brokering full time, and I've been dealing with clients. And let me tell you, a year and a half away from brokering, completely a different landscape than it was before when I was doing it. I just had a deal declined by a lender on a refinance, and they're the existing lender. And they declined it based on the property.
Whoa.
I said, do you understand that you actually have this property in your portfolio currently? Yes, I've pleaded your case already. We cannot get an exception.
That's bizarre. I don't think I've ever heard of that.
I've never heard of that. See, you learn something. Like, this is the stuff that comes across. Like, who would have thought, right? Like, really.
Yeah, doing a refinance up to 80%. They asked for an appraisal, got the appraisal. They looked through the appraisal and said, no, we're not comfortable with the property.
Like, that's
a different underwriter than the first one.
You do realize that you have this property already.
You can't make stuff like that up.
That's golden and painful. Like, that's got to be... Like, maybe the person who underwrote it the first time got fired for putting a bunch of bad properties on the books or something. But Is it a unique type of property?
Could just
No,
be
it's
a
just-
shift in. It could.
It's just the panel. They expect a 100 amp panel and it's a 60 amp panel.
Oh, yeah.
And I get it, but now I'm looking for another lender who will do a 60 amp panel on a
Hey,
really
Jax,
big
just
house.
not to talk shop here with you, but in the past when we've done that, we've had some lenders accept a 60 amp panel as long as there's insurance that will accept a 60 amp panel, which we also do, and then an undertaking to get it fixed.
Yeah, that's the thing. I had a file. I was talking actually with Rob Campbell this week. We were complaining about files. Knob and tube wiring, right, is another thing. That they'll do like a holdback if you get someone coming through to electrician come in. They provide it's like a refinance plus improvements basically. They'll do it that way.
Yeah, get that done. That's a doable deal. That's doable for sure. Even. So this brings up some of these challenges we're having, guys. The question I have for you is where do you go for inspiration? And I'll put this question out there to any of our viewers too who want to chime in. Where do you go for inspiration when things are not going well? When you're in one of those low spots, there's the ups and downs of business. It's every business has them, every industry has them. Where do you go for inspiration to keep you moving in the right direction, to keep you focused, or to get you out of a funk? Do you have any special resources you go to? Any kind of authors you like, or you blast in the YouTube videos until your mood changes, or what do you do about that? Rob, I'm going to throw that one out at you.
Yeah, perfect, and I gladly accept the challenge with that because you know what, being on my own for 3 years didn't come without challenges. So, you know what, I think the main thing I could say is don't be afraid to reach out to other people in the industry, and whether they've been in the industry for 100 years or 5 years, you got to talk to people, and that's one thing I really am grateful for when I reach out to people to talk to them, whether it be for inspiration, or mentoring, or whatnot. I mean, we've exchanged emails with Ron Butler. I've talked to Rob McLister. I've reached out to guys like Garth Ellis with Verico. All of them have shown the decency to at least reply in an email, or return a call or a Google Hangout, because they don't forget the days that they were in that same position. And I think you can't be afraid to reach out and to say, hey, I'm kind of in a rut here. What did you do? How did you get past this? Because we're not eating each other's lunch, And if we're going to build up our industry, that's how it's got to be. And now I'm really, I'm the first to admit I'm nobody in this industry. Well, I kind of am. I'm obviously the best looking, but when I get, that was a bad joke, by the way. At least crack your mom. Thank you. I got an email yesterday from somebody in Guelph who's in the financial planning industry. She just got in, 10 months in, and she's looking to make some connections. I called her. I didn't email, say, hey, I've moved. I called her. I spent 10 minutes with her. We've done that before. We've had previous viewers that have emailed me and said, hey, can I come work with you? Can I, we watch your show, blah, blah, blah. So I think never be afraid of reaching out to somebody and just to chat, because and just say to them, this is where I'm at. This is how I feel. Have you ever experienced that? And I bet you the farm, they'll tell you, hey, it's par for the course. Work through it. Keep your head down. Keep going. If you ever need to call, here's my number. Chat, whatever. I mean, don't be afraid to talk to people, because you'll quickly realize that everybody out there is either currently experiencing the shit that you're going through, or has very recently experienced something. And you can't be afraid to talk to people in your industry. I was an apprentice in the trades. I went through an apprenticeship, 4 years, 8,000 hours as a tradesman. And the only way you learn is by asking. You don't take a risk on screwing up a job without going to your lead or your job lead and saying, I don't know what I'm doing, I need help. And they'll tell you 100 times out of 100, good, you didn't chance it on your own, you didn't screw anything up, we're going to do this together. So I've taken from that to never be afraid to ask questions. So that's my little add-in.
That's great feedback. Anybody else want to jump in on that? What do you do? What can you add to what Rob had to say about where you find inspiration when things are not going your way?
Personally, I like to I think my natural tendency is to internalize. If things aren't going my way, if things are, not quite there, I tend to look at maybe, let's say, deal flow. I tend to look at the deals that are on my plate and say, okay, how can I squeeze the most out of this, rather than going external and saying, hey, I really need to get out there and talk to people. And it's funny, because when you actually get out in the market, you start talking to people, that's where at least I find my inspiration to move forward in the industry. So rather than saying, okay, I need to squeeze every dime out of every deal I got, go out and get more deals. Go out and, talk about what your value proposition is. Talk about how passionate you are, and truly help people. Don't squeeze the people you got. Try and find new ones to help, and I think that helps you get through it.
Well, and I suppose if you, as we all have experience at times, if you lose a deal to a competitor, but you have 3 or 4 more on the go, it stings a whole lot less, right? If that's your only deal and you lose it, then bye-bye, baby's milk for next month, and you're scrambling to stay out of a cardboard box. But if you've got enough deal flow on the go, you've got a pipeline of business, you've been talking up your referral sources, things like that, then those ones that you do lose, it's just a numbers game, and you got more where that came from that you'll win. So I think that's a good perspective, Jax. Activity is 80% of it, just showing up, right? Scott, what would you want to? What do you do when you're, when things are not going your way? You're maybe a little bit down. How do you compensate for that and get back on track?
For me, I'll echo kind of what Rob said in terms of talking through stuff with other associates in the business. I mean, I'm fortunate enough here to have an office full of people as well, so I can literally walk out the door and complain to someone that I just lost a deal, and lots of times they've done the same things happen, right? So it's kind of nice to have a bit of camaraderie that way. In terms of shutting up, for me, I kind of like if I'm in a kind of in a funk to kind of shut myself off of work. I like heading out and then going to the. I'm a golfer, so I like doing that. But I also like heading there's a driving range down the road. You head there for half an hour, leave your phone.
And you head to Mexico.
Or Mexico, yeah.
Yes.
No, but just kind of turn off even for an hour or half an hour. It's nice to kind of just be able to leave your space, and brokers that still work from home, take advantage of that. It's okay to turn off for an hour, leave your phone. You're going to be fine, and do something you like. Whether it's I like going and hitting a few golf balls. Kind of shuts my mind off. That's the big thing.
Take it out on an inanimate object.
Yeah.
I think that's let the golf ball have it, hit it a little harder than last time, and get it out of your system. Yeah. Good advice. Moving on, guys. One thing I'm wondering about. It seems like the newspapers are talking about this. I don't know who BMO has to bribe to get in the newspaper the way they do. Every time they come out with this $2.99, it's like, oh my goodness, BMO, the leader, $2.99, they're back. Any thoughts? Have we beaten this horse to death? Is it even worth talking about? Everybody in our industry knows that rate's been around on a better product, and better rates have been around on better products for some time.
It's we can compare consumers that are consistently going to an institution like that, and my parents are those consumers that have banked with BMO forever. They don't know any better. They don't know any better of what the market's asking or pricing. So it's much like if you're a Chevy guy and you hate Ford and you hate Dodge, and you go into your dealership for an oil change and you see up on the sign that they're selling the Chevy pickup now at 0.9%, you go, oh shit, that's a good deal. I got to get into that truck. But they've been selling F-150s at 0% for the past 2 years. Consumers just don't know what they don't know, and it's. I don't even think it's worth talking about anymore, because guaranteed you're going to have it acquired from someone who's banked at BMO forever. They're going to go, Gord, you're in mortgages, right? Is this a legit rate? Is it? And you'll go, yeah, but arm's length transaction, blah 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 blah. And they'll go, oh, and all that they will hear is, oh, it is a good rate. Okay, and I'm just going to sign into it. So I don't know. I don't know how to approach those clients anymore. You can try to talk their ear off about everything you want, but I think that if people are rate sensitive enough and they're already at that institution, it's trying to sell an F-150 to someone who's a Silverado.
So I think what you're saying, to summarize, Rob, is that the sheep are going to follow the shepherd if they're sheep, right? It's the ones that think like a dog or think like a I don't know. I'm gonna lose my metaphor here pretty quickly, but
Wile E. Coyote.
People who are willing to think for themselves and do their own research are the ones who are calling brokers. Is that what you're saying?
Yeah, you want clients that are Wile E. Coyote. You want clients that want to kill the sheep and not get caught by the sheepdog.
They don't want to be.
The sheepdog's the branch manager, and all the sheep are the clients going into the door. You want to be Wile E. Coyote somehow.
There you go. There you go. Okay, well, we won't beat that to death.
I do have a good product to talk about, though.
Let's talk about it.
Let's. On August 11th, the Canadian Mortgage Trends put out an article called "One Solution for Quick NOAs." Apparently, it's a program called MrTaxes.ca, and they can secure NOAs for your clients for $50 from CRA within 24 hours, or it's free. Is this handy? Is this a thing? We should debate.
That could be handy. Mind you, if it's that much of a rush, don't you think you maybe haven't done your homework on the client enough to that point? Or
but how many clients actually keep their NOAs? I bet you half of the clients I deal with have no idea what an NOA is, and if they do, it's filed in a box somewhere because it's always the 2 years previous. Good luck them ever putting them together. I think it's actually a really smart program.
People, that's the thing, it's the kind of documentation, right? People either have it and it's like, here you go, no problem, or they're looking for one of them. That's exactly, you nailed it, right? So it's might not be a bad idea. I mean, they can call Revenue Canada and it takes about a week, right? Roughly.
Well, yeah, because you have to sign up and you have to get the account, you have to get the PIN mailed to you so that you can set up your account. And good luck mail coming anytime soon, especially when you're dealing with a condition of finance for a week. If you don't have the NOAs, lender conditioned it after the fact or something. You thought employment letter and pay stub was good. Now they're wanting to have NOAs instead of T4s or whatever. I think this is a very valuable service, and for $50, I certainly don't see a drawback here.
Yeah, maybe we can post a link to that, Jax, out on the CMHTV hashtag. If you're following along on Twitter, CMHTV is the hashtag of choice for all your Canadian Mortgage Hangout news. Post that link if you can, Jax. I'd love to follow up with that and check into it a little bit more. Okay, hey guys, have any of you gotten a look at the new, there was an announcement the other day, Lendwise came out with a new product called the RPM, Rate Plus Mortgage, which is kind of a weird, I don't know if that's kind of awkward naming. It's like, is the rate higher, is it lower, it's Rate Plus, I don't know. But I took a look at their product sheet. Have you guys seen this? They got a 289 5-year fixed at a 45-day hold and a prime minus 65 ARM with a 90-day hold. Are you familiar with it? Anybody submitted an application for it yet, or?
Not yet.
No. So it looks like an interesting product. It's certainly competitive. It doesn't look to be too. It does allow for ports, refinances, and equity takeouts. There's early renewal options. I'm trying to think. I don't really see where the at first glance where the limitations are. Are you familiar with any limitations on it, Scott?
No, I haven't really. I mean, it's kind of similar to. There's a few lenders that are coming out, right? Like the MCAP has their, they call it their Flex something or other. I forget the name of it now.
Flex Prime, I think.
Flex Prime or whatever it's called. RMG has their low rate basic, and then Lendwise has one that's very similar. I mean, there's a few little intricacies between all the three, but I think where we're going here is how the penalty is calculated. Or potentially. Well,
that's interesting. Yeah. So,
things, right?
You know, the one conversation that you have to, if you're not having this conversation with your clients these days, you're definitely at more risk of losing a client to say an RBC or whatever, because of how they calculate their interest rate differential penalty. But I noticed something that I hadn't seen before, and I could be just totally out to lunch. If you've seen this before, let me know. If other lenders are doing this, let me know. The prepayment penalty on this Rate Plus mortgage with Lendwise. For the first time I've seen it, it wasn't just the 3 months interest or interest rate differential, whichever was higher. There was a third option in there, and it was an admin fee equal to 2.75% of the amount being paid. So I guess over and above your prepayment privileges of 20 and 20, if you make an additional lump sum, whether it's the whole mortgage or not, you're going to pay 2.75% on that. So if it's if it's $100,000, you're going to pay $2,750. So for every $100,000, almost $3,000 of that, you'd pay a penalty on $3,000 of that. If you had a whole $300,000 mortgage, it would work out to, what is that, 2 times 3, $8,250 as your penalty. Now I'm trying to think, why would they need this? And I got thinking about maybe what they're hedging against. Like, what are they anticipating that would require this additional thing? Now, Lendwise, I believe, their interest rate differential, correct me if I'm wrong, is calculated against contract rate, right? Not posted like some of the banks are doing, which is a good thing. That's a good, fair thing to do. When would you expect to see a client, Scott, pay a 3-month interest penalty if they were getting out of a mortgage?
The only time I would expect that is if it's a VERM.
Well, as a VERM, then it's only 3 months interest, and that's all it can be. But on a fixed rate mortgage, theoretically, you would pay 3 months interest if your rate went up, right? If the rate was higher.
That's not always the case. This is the thing. It's not always the case, right? So like these IRD penalty calculations are so sometimes like you have no idea what the penalty is going to be.
Yeah, but well, theoretically though, there wouldn't be. Let's say contract rate was. Like I got my mortgage at $299. See, we've been in a period of falling interest rates, so it's always been IRD.
I mean, in theory, right? But I've seen it doesn't.
2 years from now, in theory, I got a mortgage at $299 at Lendwise. In theory, I'm not going to be paying an IRD because the contract rate, the new contract rate, would be $350, let's say, and they're going, well, on interest rate differential, they owe the client money, so they're not going to give you that. They're going to charge 3 months interest. But 3 months interest isn't that much. But it's better than nothing. It's better than having to owe the client money. And they still get to relend the money at the new higher rate. But so IRD doesn't apply there. 3 months interest isn't great. What happens in an environment where rates don't change forever? Like if we stay at a really low rate for a really long period of time, the IRD doesn't really apply.
Maybe that's where they're coming in with this fee.
Or it's small. The 3 months interest is still relatively small. Like a 3 month interest penalty on a $300,000 mortgage is about $3,000, right? Give or take. So I'm wondering, are they anticipating with this new admin fee, is that what they're planning for? Is the potential, the possibility that rates won't change for a really long period of time? Thus giving them an option.
Don't forget, right? It's expensive. I mean, it's expensive. It's expensive for lenders to get a deal, to underwrite the deal, to fund the deal. They want to keep it on the books for 5 years.
Yeah.
They don't want to lose these. They don't want to lose these deals, right? They don't, and they. I mean, ultimately, they want them in renewal as well, too, right? Obviously, because that's
what the real profit is on that first renewal.
So they're making sure, like from my understanding. The way they it's much like with the MCAPs where you can't the only time you can break your mortgage is if you have an arm's length sale. You're still going to pay a penalty, but that's the only way to kind of get out of it. They want you in that mortgage for 5 years. You know,
and it's a good way in terms of financial planning for the business. In terms of forecasting, they can look at their book of business and know we've basically guaranteed ourselves a certain margin on this product. Because if they finish the term, we get that money. If they don't finish the term, one way or the other, we're going to make up for that loss by having some penalty income built into it. So I just thought it was really interesting and kind of telling as to what people are maybe forecasting. And I'd be curious to know if we'll start to see other lenders add this in.
Yeah, I think, but the thing is, what I'm seeing with clients is you can explain this to them. End of the day, I don't think they really care.
No.
Just being honest.
The only time they care is when they have to pay the penalty.
Exactly.
Then you're a complete idiot for not explaining it, even if you've explained it.
Yeah.
They don't understand what they don't understand, and it's tough. So I mean, that's where. Yeah.
But you know what? Put that in. I mean, obviously, if you're looking at a contract that says your penalty is going to be a 3 month interest penalty, or the 2.75%, or an IRD, at least with a 2.75, if it's going to be higher than an IRD, at least there's some concrete kind of number there. You can go, this is what the penalty is going to be. I don't think there's anything wrong with that.
Yeah, I kind of like that. I mean, it would be awesome if it was just a standard, hey, your penalty is going to be $5,000 if you break it. Then you go, oh, I can now weigh that. But, well, it might be $2,000 or it might be $48,000. And that, I mean, that's what drives me crazy.
And that's the whole big thing, right? With this disclosures now, is lenders have to disclose how they calculate the IRD, and of course the IRD can change as rates change or whatever. So you have really no idea what the penalty could possibly be. If you're getting a 2.75 or 3% flat, this is what you're going to pay on the outstanding balance. I think that's a good thing. It might be high, but that's at least you know going in, this is what it's going to cost you to break it.
Yeah, yeah. Well, it's interesting. I keep an eye out, and if any of our viewers have seen other admin fees like this, I'll post the exact wording and the link to the Merrick's or Lendwise product rate sheet or data sheet, so that you can kind of look at it. But it's good to be prepared to potentially have to explain that to clients, certainly on this product.
Okay.
And I'm just curious.
On that.
Yeah.
One more thing on kind of that thing. I mean, I really, personally, you guys may be the same. I haven't had any real clients having hit with hard penalties like that, breaking a mortgage early, because a lot of times, what's changed with the refinance rules, I'm getting a lot of first-time home buyers, they have no equity to change anything anyways. So we're not refinancing them. They're really typically riding out the 5-year terms. So I haven't had somebody with a bad penalty in a long time.
Yeah, they're certainly lower than they were for a while there. So and I think that this is an anticipation of them being low for some time, and maybe flat rates for some time. So if you're looking for hints as to what the brighter minds than mine are thinking when it comes to forecasting rates, this might be a clue. And I'm going to run that by Rob McLister. Actually, Rob, if you're watching, I'm going to tweet you, and I hope you answer. So. Guys, I think anything else you would like to add?
Mark Brennan at YYC Mortgage Guy jumped in and said, for the self-tax filer, this program could have some benefits as lenders are not accepting T4s lately for income. So this Mr. Tax program where you can secure the NOA, yeah, it might be, put it in your tool belt. And yeah, think of CMH TV if you end up in a situation where you don't have an NOA, and then check this episode and fast forward about 20 minutes. There you go. Simple.
Did anybody have a flashback to the Simpsons Mr. Plow episode when the Mr. Tax is calling Mr. Tax? Yeah, no, it's good.
That name again is Mr. Tax.
Mr. Taxes. Yep. Great to see you guys as always, and nice to be back doing the show with you. Rob, glad you're settled in Barrie now. I'm going to try to remember that. It took me like a year and a half to remember where everybody was. So hopefully the concussion problems I've had don't keep me from remembering Barrie. I'll try to remember that. And yeah, I hope you guys find the inspiration, whether you're watching the show or from my fellow guests. I hope you find the inspiration to keep the grind up and do a great job for your clients, and it'll all work out.
Before we go, Rob, tell everybody who's coming on next week.
I don't know. Who's coming on next week?
Yes, that's right. Thanks, Scotty. Next week, I've been in conversation with none other than Yusri Basada from Kinetics.
Oh.
So, Yusri, our good friend Yusri, who's been in the mortgage industry for quite a long time and has got a lot of expertise and brain power to share with us. We're really excited to have him on. I confirmed him over our long summer break. And also, I'm working on the week after. I hope it's the week after. Jeff Willis. He's a broker with now. Excuse me, Jeff, if I butcher this, I probably will. I believe if he's not the broker owner, he's the co-broker over at Origin, I believe. But he's also one of the head guys at Auto. So for deal flow and a CRM standpoint, that's why he's coming on to talk about Auto. Because I know a lot of brokers have problems with when you get into a big deal flow, staying on top of it with team members and whatnot. So yeah, he's going to confirm. But next week's Yusri Basada.
Wonderful. Well, that'll be a great show. Looking forward to it. And send your questions in advance so we can prep Yusri on what he can expect, so that we don't inundate him with too many questions. But I'm looking forward to having him on. He's a great guy and a legend in the industry, really. So thanks, Rob. Thanks for arranging that. Have a great week, guys. Enjoy the rest of the week and your weekend, and we'll see you in 7 days or so.
Goodbye.
Bye.
Bye.